Hello, everyone, and welcome to the second live stream with Block Party Trading. The general theme of the live streams are obviously active live trading and things like that. But, we have so much to talk about within Block Party Trading that we'll probably cover a lot of that in between trades because it can be a little bit boring when you're just looking at charts and they move very slowly, even though we are trading on the 3-minute. It is always good to talk about something. We've had quite a lot of exciting movement today. I mean, with the collapse of First Republic, not collapse per se, but it's absolutely crashed 18% today. And with that as well, we saw a massive pump in Bitcoin. The two are related because apparently there's been a lot of shorts being taken out on the dollar. So, as we kind of generally know, we'll see a pretty much always a pump in Bitcoin when we see a dump in the DXY and dollar and stuff like that, because people want to get out of the dollar. It's pretty standard flow of money. It's always good to be aware of the DXY, when actually trading and stuff like that. And I guess gold as well. There are somewhat confluences with Bitcoin and gold, not a huge amount anymore, but it won't be too long before we start seeing Bitcoin doing its own thing a lot more. Sorry if I sound a little bit congested today. I haven't been feeling the greatest over the past few days. My wife kind of got the brunt of it, to be honest, so I'm not going to moan too much. Chilling. Anyway, so let's take a look at what the scalping session is saying today. As you can see here at the top of the screen, we've had in total 7, 8, 9 trades over the course of 3 sessions. It doesn't sound like a huge amount, but I think for a lot of it, we've been just getting all the live stream ready, making sure it's kind of fluid. Because at the end of the day, like, whilst it is nice to document all this stuff, this is actually kind of the forefront of everything I'm doing is the actual trading part of it. So I don't want to sacrifice the trading aspect of it in order to make the live stream better. So there is always a way to make it work perfectly. But to kick off with this, whilst we're waiting in between trades today, one thing that I do want to talk about a lot is a couple of things. One is fees. And again, I touched on the fees last live stream because they are so important. When we're talking about scalping and pretty much anything under 1%, to be quite honest, can absolutely destroy you in trading. So when you're looking at a taker fee of 0.06% on average for most futures exchanges, depending on what VIP level you are and how much of a baller you are, it can just dramatically destroy your trades. It's quite infuriating, to be quite honest. Because you have to double that. It's not just 0.06%, it's 0.12%. So if you're doing a trade that's 0.25%, which can in circumstances be quite a decent move for Bitcoin, and certainly a profitable trade as well, there's half your trade gone straight on fees. But there are ways around this, which is quite cool. You don't have to shoot from the hip every time with market orders. By nature, when we're doing trades, we never, there is an occasion, obviously we never say never, but very, very rarely, 99.9% of the time, we will be entering trades with limit orders because it's not that hard. We're not trading absolutely insane amounts that aren't going to get filled. So we're quite cautious with that in respect. So when you're looking at huge amounts, then some of it may not be filled, and it can be quite infuriating when you're chasing trades. But for the most part, for the most average human being out there, it's not going to be insane amounts. So guys, always make sure it's a limit order, because a limit in and a limit out can be in most circumstances 0.02% for a maker order. So that's 0.04% in total versus 0.12%, which is a third of the amount in fees. So make sure you're always doing that. Like, one thing that I will say is absolutely fine to do is always to exit a trade with a stop loss as a taker or a market order, because you want to be out of that. Like, at the end of the day, if we see kind of movement like this, for example, when there's a massive candle shooting down, and it just kind of get a little bit easier to see. When there's a candle shooting down like that, for instance, then there are chances where not only will it have slippage, but there's a chance that it might not be filled at all. So it's just free falling. And if you're in bed or something like that, and you wake up to a trade which was meant to be a 0.5% stop loss, and it's gone 18%, that's pretty much you liquidated on pretty much a nothing trade. So yeah, just be wary. Like, don't be thrifty to the point where it risks everything. However, all that being said, with the general, all that being said, with like the general overview of fees and everything like that, and just this is standard practice kind of thing. A lot of things that these courses in trading, they won't tell you about, because it's not very glamorous, like it's not very fun to talk about fees. It's not very sexy when you're getting a bit nerdy about fees and everything, because all you want to talk about is these amazing divergences on supply and demand, areas of supply and demand, and spotting these great trend breakouts using the Fibonacci and all your harmonics, which I just think are a bit pointless, in all honesty. In crypto, they're great in stocks and forex and metals for sure, but in crypto, I think harmonics are just a bit, I just don't think they work. They might work, I don't know. I'm not the oracle. I have a strategy or a couple of strategies that work for me, make me a lot of money. I stick to that. It's not broken, so it doesn't need fixing. But trust me when I say I've been through, I would say I've been through pretty much most of the strategies out there, certainly all of the core strategies and styles of trading out there, because as a kind of algorithmic trader, if you will, kind of very mechanical in my trading, I like to assess all strategies, put them through the proving ground back test, and see if they work or if they're just bullshit. Most of the time they will work in certain circumstances. This is kind of how trading algorithms are built. We might be seeing a signal coming up soon, actually, and that'll be a short. So let's just get ready. So before I talk about the entire history of me trading as an algorithmic trader, let's just concentrate on this. So as we can see, we've got a signal that's going to potentially pump. We're breaking through on the CVD support line. I see it, although that has that already triggered? No, that's not already triggered. It should have triggered there, but it didn't. We might have a signal popping up soon, which will be a short. And that I'm not ever so sure about taking a short right now, but every time I ignore that and I go with my instinct here and I go against the algorithm, it never works out well. So I'm not going to do that. What we are seeing, we're not seeing any divergences. Worryingly, we are seeing a bit of a divergence here on the 3. So this is kind of, you see this little flat, it's kind of bounced off there, whereas we've seen a massive pump up there. So that's kind of showing a bit of a bullish divergence. And what we are seeing as well, interestingly, is a tiny bit of a bull flag coming down here. So we're dropping down, which means that unless we pretty much break this section here, we could probably if we get a signal here and we put our stop loss around about here, let's just visualize it a bit easier for you. So you're not pretending. I mean, this is a pretty not horrendously tight, because of this big move. It's not a horrendously tight stop loss here. 0.45% when you're trading on the 3 minutes. Sorry, is pretty big, especially on Bitcoin. That doesn't usually move in an instant. So that's pretty cool. So if we do get a signal around about here, we're aiming for a 1-to-1 as always with the strategy, using the block party indicator to power all of the trades today and forevermore. I say forevermore, everything works sometimes, nothing works all the time, but this has been through the motions a lot, so I'll be quite surprised if it doesn't hold up forevermore. But I've actually had very good success with it on gold. But what I found was when I was trading gold, I had I was putting out trades on the CopyTrader for swing trades. I was doing scalping like this. Then I had MT5 set up over here, doing like funded accounts on gold. It was getting a little bit excessive. So decided to down the tools for gold, and then just focus on the crypto scalping again. It's good fun to trade on MT5 because it's such quick execution. I definitely recommend for people taking trading seriously to get familiar with it. It's always good to have as a bit of a backup for crypto, especially if you're in countries where futures doesn't have availability. It's like America, for instance. It's great to actually. It has broken through. So interestingly, no, I'm not going to go off strategy. I always do this. I always think there's a good way. I mean, that has broken down. That's a nice retest. In a traditional sense, I would take this trade around about here, but it's a bit unnerving that we're in this like kind of bull flag right here. And I just think with everything that's going on today, I don't think we have seen the end of this pump. But then again, if this is going to go one or two ways hard again. So yeah, it does unnerve me a little bit trading in scenarios like this where we've, excuse me, seen quite an extreme move. Because why? It's because like there's a lot of FOMO going on, or FUD if it's going the other way. And technical analysis can somewhat go out the window, even though we see like quite a distinctive bull flag going on here, which is really nice. It should be going up, but we can equally at the same time just see an absolute collapse. This is such a big move for Bitcoin right here. We've gone up 5.65% in just over 4 hours. That's a big move. So there could be a lot of profit taking. It's not that late in the day. All of the US hasn't got up yet. As far as I'm aware, a lot of the US hasn't got up. Certainly a lot of the retail traders. So, they could be coming online being like, oh, cool. We've taken a lot of profit. Let me get it. And as well, like with the First Republic Bank FUDs going on at the moment, whatever market it is, that kind of thing it's never... I mean, look at that. Should have taken that trade. It's going down nicely. And that would have actually filled. Well, it looks like it's going on to fill. If we see a rejection here now, then that would be quite interesting. That would show that the buying pressure is still there and we come back into this channel. That'd be pretty interesting to see what comes with that. But I don't see any signals coming on the horizon. So we can get back to talking fun and boring you about the fees. So we do have a solution, or there is a solution out there for fees. So don't worry. I wouldn't be scalping on this if fees were such an issue. As you can see just on this screen here, we see that MEXC, which is what we're trading on now, has 0% maker fees and taker fees are 0.02%. That's right. You heard that right. That's 0% maker fees. Now, these fees right here, the taker fees on such exchanges like BitGet, Binance, see it bouncing there, are 0.02%. And that's the best case scenario. Whereas the worst case scenario for MEXC is 0.02%, which is insane. Like I haven't seen this for quite some time. And then make fees, if you're entering in and out of trades with like limit orders, then that's a free trade. I mean, you can make money off a 0.1% move. It's insane how much that changes everything when you're scalping is unbelievable. Because you can even be more aggressive with closing. Like generally, you're not as inclined to close even at break even when you've got such a small target trade, because it can really hurt you. But whereas with these fees as they are at the moment, you can be so aggressive with trading. Not that you need to be aggressive in order to make money, but you can be, and it's really quite cool. So if you are looking at scalping right now, I really don't see any other option outside of MEXC at the moment. Naturally, it's an exchange that hasn't got as much prominence as, Binance, even Bybit now. So they're making moves towards being full KYC in all countries, which is interesting. So that's kind of they're going to be aware of how much business they're going to lose from that in countries where futures, I guess, is not kind of so much permitted. But a lot of these users are gonna migrate to exchanges like BitGet, like MEXC, for instance. So it's a double-edged sword really for them, because they need to do it in order to become like a bigger, globally recognized exchange. Whereas at the moment, MEXC and BitGet, you don't have to do that. But yeah, for the most part, MEXC, it's got a lot of liquidity behind it. It's more of a futures forward exchange, so it's good that there is a lot of liquidity there. They are branching into spot a lot more. You know, I'm not saying they've just done this overnight, but they are doing it. So here's a lesson learned. Sometimes listen to your instincts. As you can see, that's going straight down. We are breaking down on this bull flag, so we could end up heading a lot more. But that being said, look at this bad boy divergence. So let's get rid of this line to make it a little less confusing and make this oscillator bigger. There we go. Look at this divergence cracking in here, and we've got nothing but up here. So in reality, we can pretty much head all the way down to around about here. If we get to this area, we could see a serious bounce back up, and this could be a real nice place to capture a whole bunch of liquidity. I mean, you could argue that this is a very loose argument. This is kind of like a broadening wedge coming down. So we could see a point to break here. But I just want to show you something on the 6 hour, just to recap on the fees. Guys, use MEXC for scalping. It's just awesome. We have an affiliate link. It doesn't actually grant you any bonus. For sure, use it. But since the fees are so low, it's, you know, we won't make much out of it. It's just good to use. We might be able to offer some kind of work with them, and any of our affiliates might get some bonuses down the line, but I can't guarantee that. We haven't really spoken to them about it much at all. We haven't been, this was an affiliate link from ages ago, to be honest. You know, we haven't been massive drivers of MEXC until quite recently. Since they've done the fees thing, it's amazing. Like I said, it really does change everything about your scalping. So check it out. I do want to show you something on the 6 hour for Bitcoin, which Robotnik spotted it in the BTC analysis yesterday, which was the bullish divergence. And as we can see on the 4 hour, we're looking at the 6 hour at the moment, but we can also see it on the 4 hour, on the 6. That was on the 4 hour he did the analysis on, but we can see it on the 6 hour here as well. So this is super duper significant. We speak about this a lot in the block party indicator tutorial, in how these moving averages and these specific settings that it's set to, as you can see, I'll show you behind the scenes. So we have our moving average menu, and we've got 3 moving averages. They're all set to the EMAs, and they're all set to the 1 days. And then we've got the 20, the 50, and the, that says 300. That should be 200. There we go. When that got changed, must have been when I was messing around. So we've got the 20, the 50, and the 200. These are probably the most popular, I guess, most popular periods to be looking at moving averages for. With the 1 day, I'd say, again, arguably the most popular time frame that people are looking at. And then the EMAs, that or the moving averages, simple moving averages, are probably the most popular calculations for it. Personally, I think in crypto, the EMAs are the most popular. So that's why we use them. But a lot of people use these for like spotting trends and stuff like that, which is fine. But, you know, they're just so lagging. Unless you kind of get into a bit of a movement like this, which is, you know, you'd end up kind of still getting back, even if you got into a horrible position like here and you rode down 20%, you'd still be in a good place right now. You'd be 19% up. But as you can see how lagging they are, like if you're going to do that whole death cross thing, or golden cross, sorry, which would be around about here, the 50 crossing above the 200. This is probably one of the worst possible trading strategies. I really think it's like loads of people come across it. Loads of people think it's the golden goose because it happened a couple of times on Bitcoin successfully. But it's honestly, it always gives you the worst entries if you trade golden crosses and death crosses like exclusively on the crossover. So as you can see here, if you'd have traded that, it would have taken you down 20% and you'd have just been throwing money away. That being said, if you had a pretty nice like martingale DCA structure, buying incrementally as you go down. That'd be all right. But yeah, terrible. The way that we use moving averages, specifically these moving averages and settings, is actually as a moving support and resistance. So as you can see here, I mean, this is almost like I drew it kind of thing. It was worked out that perfectly. So we've got the 50 moving average EMA right here on the daily, which is a very, very big one. I'd say in order of importance, 200, then 50, and then 20 for most popular, most important EMAs as support and resistance should be tracked. So we've got the 50 EMA, price shoots down, and this is not a small move, this dump. This is 11%. So why of all places would it stop here? You know, like, let's be real. There's a bit of liquidity here. Yeah, there's a bit of support in this kind of area here for sure, but enough to actually condone stopping and holding this. I'd say a lot of this does have to do with the 50 EMA acting as support. And what we've seen as well here is we've had a nice divergence start to pop off. So thus the analysis yesterday saying that, you know, price will hold. And then there's another special, which hopefully you've spotted it, another real special indicator here, which is part of the block party indicator package. The weekly pivots. Now, we've been using weekly pivots specifically pretty much since day one. And the cool thing with these ones is when the price shoots down, so let's say here comes Monday, the new day, if they so frequently get filled, and this was like a big telltale sign because this hadn't been filled yet and the price was down here, we had a divergence. We had the 50 EMAs acting as support and this weekly pivot sat above, not filled. You know, this would have been a bit of a real kind of prompt to take along there. So yeah, so make sure that you kind of pay attention to weekly pivots and you're using the moving averages, EMAs or whatever, you're using them correctly and not so much as, you know, defining the trend as such. If you want to define trend, guys, in a very simple way, higher highs, higher lows, or lower lows, lower highs, they are pretty much literally telling you that supports are being broken and being lost. And that's real indicative of a trend because people are getting out of positions or getting into positions. It's as simple as that. They're not kind of abiding by the moving averages are so lagging, like they have to be lagging by nature. But it's interesting that, you know, naturally a lot of people would use them in that sense. I certainly did when I first started trading. But for me, like I said, I don't really use them for that at all anymore. So yeah, so bear that in mind when trading in a more macro sense. There we go. We are bouncing. So interesting. We would have almost filled that. Probably would have closed that had I been in that trade anyway. I'm not saying I would have closed it right there, but generally I'm pretty trigger happy with taking profit early on these trades. When we get within, you know, 0.1, 0.2%, I'm quite happy to take that profit. You know, all I'll do is I'll slide the limit order down or up, whichever way we're going, and I'll get out of that trade completely fee-free. And it's just a win. You know, I think, yes, on the last live stream, the way we were trading was we had one short open, which was going the wrong way, but we had two longs open. We almost opened a third one, which would have been great, but we just missed entry. And we were in a hedged trade, basically. And we were, I think, 6-7% up. No, we're about 8% up at the time. But I got a bit excited and I did the thing that I've been telling you not to do, which was close with a market order. But, you know, it was the first live stream and we're just basically running through stuff. And that was put us in an 8% profit. Now, there was a potential for that to go to 10%. But we were 8% up in total, so we just thought we'd take the profit in total, really. So scenarios like that where, you know, you've got hedge trades, because if we were to hit the stop loss on that short and not quite the take profits on the longs, there is a chance that could have retraced and we could have ended up losing 3 trades. Very small chance, but there is a chance. So sometimes it's better just to, you know, go with the guaranteed win. It's not going to hurt, because I knew also that was probably going to be the end of my trading day. So yeah, so wicked. You know, I took 8%. Well, it was actually kind of 5.5% in the end after fees for the day. I mean, if you're taking 5.5% or 5% or even 2% or even 1% for that matter in a day of trading, that's amazing results. I mean, like I covered on the last one, it's like a lot of these DCA bots, certainly ours anyway, we target a consistent and as safe as possible 5 to 10% per month. That's great, like that's still 100 to 120% per 60 to 120% per year. And sometimes more if it's kind of a longer term bullish period. And that's not including compounding. So when you're comparing this to a lot of hedge funds out there, which would target maybe 20, 30% in the year, certainly the safer kind of more established ones, which is where they'd sit, it really puts it into perspective just how much money or just how good these systems can be. But yeah, like I said, I'll be honest, in crypto, it's not that hard to make short-term gains. You can create quite an aggressive DCA bot, for instance, and yeah, it's quite easy. But the problem is, it is highly risky, and it does take a lot of experience to create these kind of products that work over a long period of time, without you having to manually manage every single trade and really be aware of what's happening. And if you're going to do that, then you may as well just get into things like scalping or swing trading in a more active sense, and just trade with stop losses, because stop losses don't necessarily make anything safer per se. You can still lose money using stop losses, and equally you can still have money hold up for ages using DCA bots. So it's if you don't care about being liquid for a long period of time, DCA bots are great. But they can be money black holes in a way, but they can also be very lucrative when the market turns back in favor. But the good thing with stop losses, to be quite honest, is that liquidity thing. When everything does turn to shit, then yeah, you may lose some money, but at least you're out of it and you're ready and you're agile for the next position. So yeah, there are merits for both ways to go about it. So I have not been streaming for the past couple of days, 2-3 days. One, been feeling a bit under the weather, but two, been doing a huge amount of development on our channels and stuff like that. So the way that our Telegram channels were working previously, and still are for the next coming 3-4 weeks kind of thing, whilst we make sure everything is working smoothly. So call this the beta phase, if you will. We wanted to consolidate all of our channels to a slightly easier place to access everything and see everything in one place, to not have to jump between 4 different channels, which is what it is at the moment, which is not the end of the world. But it also meant that a lot of our channels are kind of getting a bit overcrowded. We had a lot more information that we wanted to start to provide, but we didn't also want to have to add another access point as well, which I think it starts getting a bit overkill, starts getting a little bit much for users to have to start to jump around 5 different channels. And yeah, so we found a really great solution, which is consolidating everything. But not only that, we have a little glimpse of all of our premium signals here and everything like that. So as you can see down here, we have one access point, which is block party trading. And then we've got, general chat. We've got all of our spot signals and future signals going into one channel, all of the analysis. Let's get this a bit bigger. There we go. So we've got all of the analysis here as well. Then we've got the hot news. The hot news is more kind of like opinionated news, if you will, like stuff that's, whether it's, if we've just broken 30 grand, we'll kind of pop it in there. It's kind of big news, but not necessarily impactful. Or if we see something that's we want to be a bit speculative on how things may affect stuff. Naturally, we are human. We can't be on this all the time. So we have to kind of source some news from aggregated news sources with lots of really quite complex filters in order to try and attain the most important news that's going to be coming through. And that's pretty much what powers a lot of our other news channels. But with the hot news, we like to have, we like to have some input there as well. And we like to put our opinions in there. And that's kind of the basis of the hot news. The headlines is amazing. So this will take, this works on like kind of a community-based aggregation news platform that will use pretty much upvotes, to be honest. So like vote like articles which have been voted by users of importance. So we're not just plowing through and putting out there all these news articles that are, you know, a bit boring, you know, aren't really going to do anything. So all these articles that do come through here are quite prominent, and they are headline news as far as we can tell, as voted by a community. We also add a sentiment to it, whether it's bullish or bearish, the asset that's listed, quick headline, and always a link through to what it is. Then we have our futures, our scanner. So a market scanner is based on literally this right here. So our big block party indicator, that would have hit profit. Damn you guys. I should have got this into this trade, but hey ho. What we say now, that's interesting. Since we've broken down on this bull flag, could we be going lower? We'll see. Is America going to start buying or selling? So the market scanner will populate a whole bunch of trades. Too many trades for us to put out in a premium sense. But all the trades that do go out, we track them, all of the spot assets on USDT and BTC on Binance. And we track all of the futures assets on BitGet. We've got some scalp trades going in there. We've got the top 50 for 1 hours. We've got, like DCA signals that will come through as well. So they'll give you really good target buys for DCA orders. If you're in like hodls and long-term trades, and you want to add more to your bag. So they're good for that. But there's just simply too many of those signals that will come through to, this is kind of pretty much just today. So there's too many signals that will come through for us to be able to put them into a tradable format, because all of our premium trades are based on risk. Like we are actually entering these trades ourselves. We're using them for copy trading, and what a lot of other channels will not take into consideration is what trades are currently open, what is the actual risk profile of a customer using these trades. So we generally operate to around about 10% for futures and around about 5% to 10% for spot on USDT and BTC, depending on how the market is. If it's particularly bearish, then the overall risk for spot will go down considerably. If it's particularly nasty trading like environment, whether it's really heavy consolidation or a nasty ranging market, then again, we'll drop the amount of risk that's going out at the moment. Like at the moment, for the past 2-3 days, I haven't really been trading on futures for swings because the volatility has been horrific. We closed out pretty much, it's been doing really well, to be honest, for this past month. But yeah, the volatility, like I didn't really see this massive pump coming prior to this one. There was a horrible dump, so I thought we might be going a bit lower until we started to hold here. But trading in this little period, so you're not looking at this screen here. Trading in this little period here would have been super risky, to be quite honest. So it could have very easily gone either way. It was holding for sure, and we had a sentiment towards bullish, but after a dump like this, you need to be a bit cautious. I don't like trying to catch knives. There's not really much point. You really want to be trading on pullbacks if and where you can. So, for example, a pullback would be something like, I guess this. We kind of break up through this kind of resistance here. We go up here, break down, we break through, come back down, retest, and go up again. So you want to be trading in these kind of regions. I guess this could be deemed as a pullback for sure, but that kind of much of an aggressive move down is a bit risky. So yeah, been a bit dormant on the futures trades for the past few days. Just like I said, it's a bit choppy conditions to be trading in. Generally, I've got smaller targets than spot, so need to be a bit more attuned to where these wicks are going to nail you. So the scanner is really cool. It's flying off 24/7. They're really, really strong trades, and you can just, if you want to go off piste and trade yourself, you can just jump in there. Product updates, nothing too exciting there. That's where we let you know about all of our new products and also updates to them. Token news. This is probably one of my favorite channels because this tracks all of the actual token releases. So let's say, Matic is partnering with Disney, or there's a new hard fork that's been announced, a new mainnet, for instance. You'll see that these go very dormant during bearish periods because tokens don't want to invest a whole ton of money when there's no interest in the market. So they will generally sit on like big announcements and stuff like that for until the market starts to turn, go bullish, which is why we see quite a lot more announcements coming out over the past few months, yeah. But yeah, it's super, super, super handy. So we track pretty much the top 200 assets here, and we tend to avoid things like AMAs because then it gets very spammy. Results all here as well. On-chain is super good. This is a look into the real data, I guess, of blockchain. And this is what it's all about. This is kind of pretty cool. So there's lots of different metrics that you can check here. Every day there will be screenshots sent from Glassnode of prominent charts, and also really good news articles from Crypto Quant and Glassnode, that people have done a lot of the legwork already to showcase what their opinions are on certain on-chain characteristics and how it might affect. Now, on-chain is very much more of a macro style way of trading, to be honest. Like you're not going to go into an on-chain data set and suddenly start scalping off it. It just doesn't work like that. However, that being said, there are certain things like hodlers wallets and stuff like that, dormant wallets kind of coming back to life, which we do track as well, actually. They can be quite prominent, and big moves can be very soon after that. So it's very worth checking out. We've got the spot version of the scanner, so we've got futures and spot. This is the old scanner was getting quite overcrowded with a lot of signals per day. So we split those two. And then the other one as well, which I've skipped over, is exchange news. So this is where we'll find all of the new listings on different exchanges. We will find, this is a very new channel, so they haven't come through yet, but movement of large amounts of crypto from one wallet to another, which can moving, depending on where they're going, if they're going onto an exchange or off an exchange, then they can mean, is there a sell-off or are people hodling? If you see a lot of USDT coming onto an exchange, it means that people might be preparing to buy. If you see a lot of BTC coming onto exchange, people are going to be considering selling. And then as well, we're tracking dormant wallets. So if wallets are being dormant for a certain period of time, there's actually a scaling emoji scale that will give you a gradient on how long the wallet's been dormant for. Now, they're really important. I'd probably say arguably the most important, because when a wallet has been dormant for 10 years, let's say, and it comes back to life, there's an extremely high chance that that is going to be sold because people want to take profit. So when people see that, it's that whole domino effect thing. People will start to sell, and you can see sell-offs. Then lastly as well, we also have the announcements from Binance in there. Now, these are obviously very specific, the fact that we're tracking announcements for Binance, but when Binance is supporting an asset's hard fork or something like that, that is definitely going to lead to a pump. It's really as simple as that, because it's the biggest exchange in the world. It eclipses all the other exchanges in the world. So that's why we track just Binance and not other exchanges. Even Coinbase to a degree, it's like they do horrific manipulation. Like every time there's a listing on Coinbase, it's just dumps and people get wrecked on it. It really makes you question a lot of it there. But these are really helpful depending on what they are. There's no specific one size fits all. If this happens, this is going to happen. That's just not how life works, unfortunately. But one thing that is good, this is pretty much from the source. So if it gets announced on Binance, then it's not going to get announced anywhere before that kind of thing. So it's a very, very, very efficient way of getting information on what's going to be happening in that respect. So yeah, we jumped from 4 channels all the way to about 12 now. And yeah, it's really, really, really good. Like, we really like it. So we're just going to make sure everyone's happy with it and we're happy with it over the next few weeks, and then pretty much migrating to this. So that's what we've been busy beavering away with over the past couple of days. Very exciting stuff. and still just waiting for a signal to come in. Obviously, we can't force these things. It's a big important. Big important. What am I talking about? It's very important to remember to not overtrade or trade just because you're bored. Goddamn, learned that lesson hard a few times. You know, feeling like we should put out trades for the sake of it. You may as well. You know, in some scenarios, it is just down to boredom, impatience, and what they always say in trading as well is like you've got to have patience, and it's not necessarily about being in a trade already and, you know, exiting the trade in a loss when you don't have to, or exiting the trade too early because you're being impatient. But it's also being impatience can affect you before you enter a trade. So you don't want to be like I said, like if you are unsure about something or something doesn't fit the analysis, then don't force it. Just like I said, because you want that thrill. And that's really what it comes down to. Like at the end of the day, like I said last time, it is gambling, you know, as much as you want to dress it up. So don't get caught up in it too much. Okay, now with this bounce, that's quite cool. We've got a descending, broadening wedge. And this is quite bullish. So it's pretty much just an evolution of the bull flag, if you will. And yeah, if we break out of up here, which would actually sync with a breaking out of this descending trend line here, even though we are technically going to break out of that one there. We could get into this trade a little bit early, but again, I want to stick to the actual signals and follow what they do. So this signal set on Bitcoin, Ethereum, pretty much all of the top 10 crypto assets. I don't really trade or certainly don't scalp anything below the top 10. There is point, but it starts getting a bit sketchy with movements. And at the end of the day, everything follows Bitcoin to some degree, apart from a few outliers based on general news or fundamental announcements or manipulation, if you will. So it's kind of worth just trading the top 10 assets really, where a lot of the capital is. I'll generally go trade different assets from Bitcoin just for a bit of fun, really. You know, it's like I said, a lot of them just will follow Bitcoin so closely. XRP is a bit of an outlier, if I'm being honest, at the moment. That does seem to move not crazily, but a little bit independently from Bitcoin, which is quite interesting. And that's not been happening for too long. So keep an eye on that. It's a bit of an interesting thing because it kind of makes you consider, like, are people choosing Bitcoin or XRP? You know, is there a bit of a mindset? You know, after all said and done, XRP's done an amazing job of holding its market cap and its strength in the market. That, and also I think everybody's just finally realized how much of a dipstick Gary Gensler is. I mean, he's obviously got an agenda. Like, it's so abundantly clear now that it's not really cited in, you know, protection or security of the general American, and it's just been used as a scapegoat. I'm confident they're going to lose. I'm confident XRP is going to win. I'm confident the SEC is going to lose this case. And when you start to think about it, the amount of money that they've piled into this, XRP can keep this up all day. They've got bank, you know, they've got so much in terms of investment that they can keep this up forever. The SEC, I'm not so sure. You know, like at what point are they going to have to pull the cords for all these lawyers, all these legal fees? It's not free just because, you know, it's the government. It's not free. So how much will it cost in the end? And also, like, even if they do lose, like, you better believe that they're going to have a backup plan. Like, it's just America. Like, they're fine to be everywhere else. It's just in the US. But like I said, guys, honestly, with XRP, I know it's a bit of a no-brainer there, to be honest, because at the moment it's it's not available. You know, on Coinbase, it's not available on Binance US. At least I'm pretty sure it's not. So as soon as this case gets dismissed and they win, then it will become available again, and that just opens the doors to It's like an amazing, it's like a market leading product being available in the most popular supermarket. That's what'll happen. It means that so many retail people will be exposed to it that it will just passively increase in market cap. So there's not a this is not me kind of being like, oh, this might potentially happen. This could be a case scenario. This is just the reality. Like it's going to be in a very, very, very busy shop window again, and people will buy it. You know, it's there's always been some sort of romanticism about XRP, which, you know, I think, you know, with the XRP army is kind of one of the OGs, and that hasn't gone away. You know, it's still maintained its strength, still underpins a lot of big projects as well. Some that we know about, a lot that we don't, or that can be announced. And then, yeah, of course, like all the institutions will come back on board. And yeah, it's simple as that. So after that monumental tangent into XRP, I hope it would just be really good for the crypto space, to be honest. If they win, it will show that that strength. And you know, America is not doing themselves any favors at the moment, are they really? And that's kind of being shown with how the US dollar is being, I wouldn't say attacked, but being affected. And it, you know, it might not be the dominant currency for much longer. So that'll be interesting because, you know, the Asian markets, or at least the not Americas, are a lot more receptive to crypto for sure. So, you know, it's not ideal, but it'd certainly be quite beneficial for the US dollar to not be the market leader in that sense, and, you know, crypto to start taking more of a forefront there. Super exciting. But yeah, so yeah, like I said, we've got a massive, massive, massive tangent. We're not really seeing too much movement. We are bouncing nicely. And like I said, if we start to break out of here, we should slowly intercept this line. And what I'm looking for is a breakout of this line right here. Once we see that, then I'll take a trade, and the trade setup will look something like this. Realistically, be around about there by the time we break. So our stop loss will sit just underneath this recent swing low. And as you can see, it's very mechanical how we trade. We really do stick to the signals. There's really nothing else to it. I'll be honest. We can do all of this nice patterns and fancy analysis and stuff like that, but the reality of what we are doing, what we are trading, is we are just taking our signals of the indicator, an algorithm that's we spent a long, long, long time building, and we know that, you know, I say we know, we obviously can't tell the future, but with all the back testing and all the live testing, we know that it comes in between 60 to 70% win rate, generally per day, and also within certain trading sessions. So generally my trading session when I'm not developing and stuff like that, I try to aim for between about 9 till 5. And, you know, it's not me staring at a chart for 8 hours at all. You know, I'm doing quite a lot of other stuff. In fact, actually, I just bought this backbone thing, which is the greatest invention, I think, of all time. I'll talk about that in a minute. But a lot of you gamers will probably already know about it already. But I'm a gamer coming out of retirement. That's the plan anyway, because I have a bit more free time. Lol. Yeah, so we'll wait for this trade. I'd love to get a trade in. I'm not streaming for too long today, so I've got a meeting in half an hour. But I'd love to get a trade in, a nice little long, see where it goes. You know, I'm so tempted. Right, this is another thing which I just said, which I'm not going to do. So tempted to really extend this take profit in case we do see some strong movement. But, you know, it's going against strategy. Like I was saying earlier on, like, we know that this has got a 60 to 70% win rate pretty much per day, to be honest. It's very rare that we come out with a losing day. If you were to hypothetically take every single trade of that day, which is pretty tough unless you've got two traders working back to back, generally within sessions, which is what I trade anyway. And I'll do all my back testing based on a session. So 9 till 5. If there's a trade just before 9, but it's still valid moving into 9 onwards, then I would count that trade as well. We have a full back testing sheet as well, which is available to the public actually. And you can find that on the website for the indicator. And yeah, like it generally comes out with about like I said, 60 to 70% win rate. When I'm actually trading it myself and I'm being a little bit more agile with taking profits, then that can move up to about 80, 90. As we can see on the actual wins so far at the top here, I'm actually on an 86% win rate. We've got 2 break-evens in there, so we discount those from it because, yeah, it's pointless. So of the 7 win or lose trades, we've won 6, and that's been, yeah, you can actually just see them just here. So as you can see, I've not actually been trading these. The way that we're doing these, logging these, is actually per session. So I think because it can be a bit misleading if it's like per day, because if, 26% over 3 sessions is incredible, to be quite honest. It's not like that all the time, and we are operating at a bit of a higher risk than usual because I'm using a smaller balance. But so can you. It's all relative. If you want to 10x the balance, then trade with 1% instead of 10% risk, and vice versa. Or, if you are a complete degen, do your full balance at 10%. At the end of the day, it is completely down to you. How you want to trade. I'm not here. I'm not a financial advisor. I'm not going to tell you what to invest. Quite frankly, it's it has nothing to do with me. All we do is we provide the tools to help you, I guess, navigate the market, make pretty well-informed decisions. But yeah, like I said, with going back to the how we're logging this and everything like that, I think it would, it'd just be a bit misleading because it forces you to take non-trading days into consideration, and then 26% P&L over 7-8 sessions doesn't seem quite as prominent as 26% over 3 sessions, which is what we actually did. So we're tracking it via sessions in that respect, which I think is fair. Then at the bottom we have our current session, which we've had no trades today. It's a bit of a shorter live stream today. Just wanted to jump on and read through it. But the other thing that I did want to talk about, unless we get a trade coming in, keep an eye on that, is this handy little risk calculator. And it feels so prehistoric, but it really is super handy. Like everything that we do in trading and strategies, and everything you really should do in trading and strategies and stuff like that, is work by a risk concept. So working by a risk concept is basically not putting in a fixed amount per trade with varying stop losses. So you can use a fixed stop loss, but that's not a good approach for trading, because you should always be placing your stop losses on market structure, or at least some degree of like volatility based indicator, whether it's like the ATR bands or something, as it will give you the best chance of not getting stopped out if the market doesn't go directly to take profit, as everybody wants to. Very rarely does. But what you need to be considerate about is not having varying losses and wins per trade, because then it starts to become very randomized, and you can't wholly say that a randomized amount per trade that you win can be reliable data. So when dealing with strategies, you kind of need to be as consistent as possible. Otherwise, like I said, it just becomes very randomized. So in a nutshell, risk basically means how much can you potentially lose per trade. And at the moment, I'm using $125. We started at 100. We're $25 up, so we're 25% up on the account. So my new risk is, and I'm using 10% per trade. So we're going to be compounding this probably over like 10 sessions or something like that. Or we might just continue to compound this and see where this $100 goes. So we're currently using 10% of $125, which is obviously $12.50 in risk. So whatever that means is if we have 10 losses in a row, that's right, we will liquidate the account, we'll be done. I've not ever seen that scenario with this indicator. Of all the 100,000 backtest trades that we've done across all assets on various different timeframes, we've never seen 10 in a row. Now, this is not to say that it can't happen. Just because we haven't seen it, it's not to say that it can't happen. There is always a scenario where something is possible. And with this, there is pretty much like always 100% chance risk of ruin if it is based on an infinite timeline, but it's not. And this is reality. And at that point, if you get to loss 5 or 6, then probably stop trading. And you're probably not going to be using 10% risk, are you, for most circumstances? So let's say that you're using 1%, you'd have to lose 100 trades in a row to liquidate your balance, which I would say is as close to impossible as you can get, because, like I said, we've not seen more than, I think, 4, maybe 5 losses in a row. Even then, I don't think it's that high off memory. Like I said, I need to track through the data to see what it is. But not to say that we don't have losses at the end of a day of scalping and stuff like that. Sure. Like, on the back testing, we can have like maybe 10, 20%, even 30% in losses. It really depends on where your scalping session ends. And if you've not got through the rest of the, churn through the rest of the trades for that day, you could be hitting a bad patch, and that's when you end the session. So you could be 20% down, 30% down. But for the most part, even in the actual sessions themselves, you're ending about 10%, 20% per day. And that's, which is obviously insane. And I'm saying I don't recommend using 10% risk, but it's $100, so why not? So in order to, the only problem is that you'll find with risk and stuff like that is a lot of platforms, Annie's done a really good job of it, I've got to say. So Annie's Smart Trade platform, on their actual trade settings and stuff like that, literally go anywhere near our website, you'll find a link to it. On their trade settings, they display the amount of risk that you're putting into that trade really well. It's so easy to use and so easy to set. You can use the risk. You can get risk amount per trade by using this tool here, which is really cool. So I've covered this a few times. So if you right click on the long position tool, you've got to make sure you set the long position tool up correctly. So if your account size is $125, then your risk is 10%, then that's all set up. You've got to make sure that your actual paper trading on TradingView is set up as well, or if you're using an actual broker, is set up correctly as well. Just right click on it, hit create limit order, and it will tell you the amount of risk in units that you're trading. So this is Bitcoin. For me to risk $12.50 worth of Bitcoin on a 0.86% trade, that would cost me 0.049 BTC. And yeah, so we'd just throw that into here on MEXC. So put that in there. It would tell us that. Oops, there we go. There we go. That would actually be costing us $1,460 in total. And yeah, so that is kind of like one way of doing it, but it's a bit long-winded. So let's say the market is moving quite fast, and you have to keep on moving this around, right-clicking, creating the limit order again, putting it back into there. It gets a little bit. You want to limit as many clicks as possible when trading and when scalping, and basically leave as little room for human error as possible. In an ideal world, an exchange would basically, you'd be able to populate your stop loss down here, and it would instantly work out the risk here, which would be great. But it doesn't, unfortunately. The BitGet got very close to it with having the broker integrated with TradingView, and you could just basically send that trade straight through to your BitGet exchange. However, for some reason, they never integrated the take profit and stop loss, which is kind of the whole point of it, unfortunately. So they've said that they're still working on it, which would be great. But yet again, the fees are a bit too high to be scalping on. So now I need to start pestering MEXC API team to integrate with TradingView, because that would be awesome. But we have actually it's not really that hard. You can make one yourself. But I've got a little risk calculator here, which is much quicker. So, for instance, I will preload it with, and also you can do it with a compounding format. You can go as far as to write down the actual numbers. So if you're just sticking to a fixed $100, for instance, and you're going to be using 200x leverage, you can just do it that way. The leverage doesn't really matter in that circumstance. Leverage matters if you're doing the cost price, but when you're doing the total price, leverage doesn't matter. But you can literally just create your own little risk calculator. I can share this on our free. But you can create your own little risk calculator here. You can do it one of two ways. If you have it on a separate screen, you can just do the bandwidth of the trades that you will likely be taking. I will very unlikely be trading higher than 4%. So I've got all of the increments of how much it would cost me for a 10% risk on $125 capital. And this is the total that I would change this to USDT. Just here. And come back. So if we had a 0.86% trade, or let's be a bit more agile with it, jump back on this screen, and it's now 0.62%. So 0.6 would cost me $2,083, 2,083, and I just hit short. And I can fill out all of the stop losses and take profits afterwards, but you can see how quickly that was done just by simply using the measuring tool, because I know my stop loss is going to be here, or at least around there. And then that gives me the exact amount that I want based on the certain parameters. So that was super quick. Or the alternative way you can do it is you can just put in 0.63 in there, and then that'll give you the exact amount, which is 1,984. So very close, and then you can just copy that in there. So there's two ways to do it. You can do it on a custom basis or just have it preloaded. And yeah, you can do it real fast. And this is kind of quite good. Obviously, if we go up to the next trade and it takes us to 135, then everything will adjust. And yeah, like I said, this for me, I found actually, although it looks a bit old style, a bit old school, using a sheet, if you will, an Excel sheet in a way. Obviously, it's on Google Sheets, but it seems a little bit old way of doing it. But it doesn't matter. It's whatever the fastest way is. So, and this is the fastest way for me. And I quite like, especially when streaming as well, because it's quite nice to keep the screen estate a little bit more free. So I can just jump out of that real quick like, and go straight in. So we are still waiting on a trade to come through, and we're getting there. We're getting there, but it does need to if this doesn't break up here, then I think we're going to be waiting another 20 or so minutes before we get a trade in. So we might be able to see some action today before I have to jump off, but maybe not. All right, guys, I'll be back in 5. Okay, just jumping back in. We've seen some pretty cool news, actually. It's just come up. So, obviously, unless you've been underneath a rock, then you'll be familiar with Bitcoin. The BTC ETF is pretty much like the the one thing that is going to break everything, that'll be the thing which starts BTC tracking towards 100K, I feel. And Cathie Wood is no kind of, it's no secret that she's a massive champion of Bitcoin and crypto in general, but mainly Bitcoin. She's a very smart cookie as well, so it's not founded in just jumping on a trend. She's a CEO of ARK Investment, and if you've ever seen her talk and stuff like that, you realize just how actually smart she is. But new news today, they've filed for a third Bitcoin exchange traded fund application despite previous rejections from the SEC. Now, the SEC has rejected them, obviously, but they've also rejected pretty much everyone else, including Grayscale as well. So that was a bit of a shock to everyone, to be honest, because Grayscale's so big that it just seems a bit daft. But the problem is, like, the whole thing about Bitcoin ETFs is there's a Bitcoin futures ETF. Price went crazy when that came out, even though that's not based on literally anything to do with buying Bitcoin, to be honest. But excitement around it, misinformation maybe, I don't know, but it caused the price to go crazy for it when that happened. There's also a Bitcoin short ETF. So that makes sense. I mean, you can quite clearly see the agenda there from Gary Gensler. All approved, obviously has to be approved by the SEC. And then the Bitcoin spot ETF, which I'd say is probably arguably the safest of all the ETFs, because you've actually got to, it's got to be bought like for like, has been, rejected multiple times from loads of different applications, and it's been because it's the least secure, like the most dangerous of them all, spot ETF. So it really kind of goes to show, I think what is happening here is he's very aware that what will happen, the floodgates will open. Huge amounts of money will roll into Bitcoin if it does get approved. Gary Gensler is aware of that. So there are obviously rumors flying that this could be because a lot of his Wall Street buddies are putting pressure on him to make sure it doesn't. But yeah, so we'll see how it goes. Do I have any confidence in this going through? No, to be honest. I think the first ETF will likely be something like Goldman Sachs or something like that. One of the big banks. So I don't think it'll be like Grayscale or ARK, sadly, which would be nice because I think they deserve it. But it is what it is. So yeah. Anyway, that's just happened today. What else we got going on? We've got there's quite a lot of USDT being transferred off Binance at the moment. Yeah, we'll keep an eye on the news and things like that. Other than the thing that seems to be leading news today is about the First Republic Bank, unsurprisingly. Okay, we're approaching this. We might have a signal coming up soon, which would be nice. Getting to a little long. And then, yeah, with all of our trades, once the risk is done and calculated, we always do one-to-one. For the longest time, you go back and forth on what your risk reward should be. And the reality is, yeah, it doesn't always have to be 1.5 or 2 or 3 or whatever. Like, it just has to be what breaks the inertia of profitability. So with this, we know we've got a 67% win rate based on a one-to-one, which any basic maths will tell you will end up in profit. It doesn't matter. Like, at the end of it all, like, if it ends up in profit based on your win rate versus risk reward, doesn't matter. That's a good route to be going down. Obviously, you can start to get a bit more conscious and efficient about how much profit you make. Saying it like strategies grow on trees, unfortunately they don't. But once you start to get into that place, and for me personally, I do really like a higher win rate. Win rate isn't everything at all. You can have profitable strategies with 30%, even 20% win rates. It's not really the point. What I like about high win rates is the psychological effect. I quite like winning. It's very unnerving when you're decreasing in profit for a longer period of time. It's very unnerving when that profitable trade, the final profitable trade, the 20%er, is finally in profit, you know, because certainly in a macro sense, because these things can turn on a dime. Like, it just takes a tweet from Elon or China banning Bitcoin for the 51st time to just ruin everything, to be honest. So it's why I'm not a big fan. I'm not personally a big swing trader. I'm very much a scalper and day trader by heart, because I quite like to be in and out of the trades. I like very little market exposure. Too many times I've seen crypto just completely reverse, and there's nothing you can do about it. It can be the best trade in the world, you know, and it have all the perfect divergences, the right supports, the moving averages, the weekly pivots, broken trend lines, and whatever Gartley harmonic on the 618 fib is going on. But at the end of the day, it doesn't matter. Like, if bad news comes out, like the Fed announcements, Powell said something wrong, the CPI comes out slightly bad, then, or good, then it can just ruin everything. So whilst I'm not saying that swing trades or hodling is bad in any sense, that's just not my preference, to be honest. You know, in fact, it's actually probably safest and best to actually be hodling and to be a swing trader as such, with massive stop losses, and to average into these trades really well. It's probably the best way to trade, to be honest, from a passive retail trader standpoint. But yeah, well, it looks like we're not going to get this trade, guys, because I think we're going to be bouncing down, and I've got to jump off the live stream now because I have a fun meeting. But yeah, like it's always good to talk about, you know, the things that will make you a bit of money, which is, you know, focusing on your risk, making sure that that's in check and knowing how to calculate it, making sure that your fees are in check, because at the end of the day, fees are free money. If you can get those down or even removed, that's free money that you're giving to the exchange. So they're giving it to the exchange, give it to yourself. But we'll see how this ETF plans out. I'll be back live streaming tomorrow. And we're going to be in a much longer session to make sure we get plenty of trades and see how it all rolls out. Anyway, guys, be sure to check out blockpartytrading.com, the website. You can get any of our products and services with a 7-day free trial. So if you're unsure about trying this or spending the big bucks on getting the indicator, then give it a try. See if it works for you. You can paper trade it on TradingView, free. You can use it for 7 days for free. There's no risk and potentially huge reward. So check it out, and thank you guys for watching, and I'll catch you tomorrow.